CNBC TV18, embarking on a quarter century of excellence.
Hello and welcome to this special program on what is a very special day for us here at CNBC TV18. We are 25 years old today. And to mark this milestone, we have with us Raamdeo Agrawal, Chairman of Motilal Oswal Financial Services. He's our guest editor. Raamdeo, of course, is someone who needs absolutely no introduction at all.
All right, exciting show lined up for you. Raamdeo is someone who is regularly referred to as the Warren Buffett of India. Raamdeo, it's a pleasure to have you with us here on the show. We will, of course, talk markets, politics, money-making ideas with him. Raamdeo's big bet, by the way, is Zomato. He has been a big votary and champion of the theme of value migration, and he thinks that the runway for growth for Zomato is a long one. So what we've done is, very interestingly, invited the Zomato management also on the show in the next half hour. Very exciting conversation lined up. We have the Zomato management waiting by with us. So let's go straight to, discussions. Raamdeo, first on the market, we can't start the show without asking you your view. And we are, of course, celebrating 25 years of business news excellence. Yes. So thank you for being a part of our journey. I think you have been with us throughout these 25 years, right?
So that's what I was, my congratulations to CNBC and the entire team. And I'm really fortunate to have been coming here for last 25 years on various occasions. So I've seen the entire journey from somewhere in Worli to Empire, then here. Yeah. So it's been amazing thing, and the consistency of CNBC brand, and CNBC has changed the way people look at the market.
Yeah.
The way accessing the market. So all the screens you see of the business channel, they look CNBC.
The consistency of the CNBC brand married with the consistency of the Motilal Oswal brand, right? It is brand building together, and that's how this equity market cult has also sort of developed. Yes. We've seen it grow in front of our eyes.
Huge contribution of CNBC in spreading the equity culture, knowledge of the equities.
Yeah.
I mean, a lot of, I get to hear a lot of people that all the YouTube actually hosts your programs. So they learn, they play repeatedly, and you create those programs and people learn out of that. So beginners, they get, so a lot of people are benefited in very different way apart from watching it on a day-to-day basis.
And thank you so much, Raamdeo, for being a part of it for the last 2.5 decades. So we rely on you, I can say that much. We spoke around the time of Diwali.
Yeah.
And at that point you had said, one way or the other, post the state election results, market is running up.
Yes.
It's going to run away.
Yes.
What a run we've had, right, in the last 3-4 days. And your call was that we will get a rally all the way into general elections.
Yes.
I mean, reflect on what you said and what we've seen.
Yeah, so we have started with a, huge 6s and 4s with the state election. And I mean, at times it is scary to see at what pace market has moved from 20 to 21,000. It's been just few days, So I don't think we can maintain this pace. We need calibration, otherwise wrong things start happening, wrong kind of trades start happening, wrong kind of money starts coming in. So I think we need a little breather. But I don't know what will happen in the short run in the market. But, the real good thing about, actually India is Sone ki Chidiya, maybe in the past in the economy, but I think Indian stock market is Sone ki Chidiya. If you see, we are at about $4 trillion plus counting. And it has been very consistent. If you see last 20-25 years journey, at about 12 to 14% kind of a compounded return. Where can you get it? In a very predictable way. And I mean what I'm saying. Yeah. It doesn't break down. Of course, in 7-8 years, when you do 6-7x expansion, then of course it corrects one wholesale. But otherwise, it has been amazing journey. And I think post-COVID, the new journey started from 8-9,000 index. And we are building up. At times it feels that are we in new era or something like that? Can we get 15, 17%, 20% compounded? I would think that has little caution. And from this level, build between 12 to 14, build 12% compounded rather than 14% compounded in your expectation. But a lot of wonderful things can happen. Oil can fall to $50. Rupee can strengthen. We can have a compounded growth of 7-8% for many years to come. So it is India's decade, maybe India's few decades. And in that, corporate profits can also grow at 15-17%. Digital era is there. So we have companies which can grow very rapidly. So the complexion of top companies can change the way it has changed in US. I think there is a chance that here also we may find 30-40% growth for these kind of companies are new normal altogether.
Just one briefly, Raamdeo, the election verdict itself, just to go back to that. What does it mean from a market point of view, political economy wise? Which sectors will, because we've seen a lot of reform and now the conviction that more will happen will get strengthened.
Yeah, so it's more of the same. But what happens is that if you keep growing at 6.5-7%, I'm not talking about anything higher. If you keep growing at 6.5-7%, your nominal GDP grows at about 12%, but the tax collections they go at 13-14%. Now, when tax collections grow like that, there is a lot in the hands of government to spend. There is so much of infrastructure deficit. We can spend $10 trillion and still we are not done. So there is a huge backlog of infrastructure and your defense and railways, and so I think the real thing is that how well economy does and how is the government collection. So government tax collections are the core of and I mean when you are a $1 trillion economy, you can collect only say 12% or say 15% taxes. You can collect $150 billion. When you have $4 trillion, you can collect $600 billion. When you are $8 trillion in next 5, 6 years, 7 years time, you'll be able to collect say more like $1.5 trillion kind of taxes. So the size of the projects, the variety of the projects you'll get to see, the size, they will just explode. So I think like if you hear Mr. Gadkari, he says that I don't have any shortage of money. I am doing 1 lakh crore project between Mumbai and Delhi. So those kind of 1 lakh crore today is looking very big. But a day will come when he will talk about 5 lakh crores a single project.
Okay.
So that's the kind of expansion we are going to see. I hope there is no break, but nothing happens in a straight line.
So, you know, from a stock market perspective, right, Raamdeo, PSUs have done really well.
Yes.
But there are so many spaces under that. There are PSU defense companies, PSU power companies, banks. From here on, where do you see both value and growth in the PSU basket?
Yeah, so see, PSU basket were beaten down big time. I mean, they didn't, I mean, they wanted little lower valuation, but not so much lower. Like if the index is trading at 22 P multiple, they got stuck in single digit, like 6, 7, 8 P multiple. And some of them are large monopolies, very important part of the economy, like all the oil companies, your power grid, your some finance companies. And also, they were all at, in fact, low single digit P multiples. So obviously, I mean, it's like saying that in South Bombay, property prices have gone from say 50,000 rupees per square foot to 1 lakh rupees per square foot. But in Andheri and Bandra, it is still at 20,000. It can't remain. So there is an arbitrage, and I think under this government in last 7-8 years, I believe at least the banking side is being managed much better than the way it was managed earlier. There is no directed lending. There is not much of interference in their work. So I mean, all those things are playing out, and finally, when the market is taking off and other markets are at 25, 30 P multiples become normal, these companies must go up. And they are very important. And they were an important part of the infra build-up. And the moment infra build-up started, your defense build-up started, I mean, the story
But some of these companies have rallied a lot, right? Like the defense space, for example.
Yes.
Do you think there's still more growth there?
Frankly speaking, I have not been beneficiary of this.
Okay.
So the guys who have studied more about it, ask them. But I think this is a good time for all the companies which are running well. This is an amazing time for Indian equities.
Raamdeoji's big bet has been financials, banks, capital market plays he's been extremely bullish on.
Yes.
Those remain the focal kind of points where a lot of wealth can be made in the next couple of years?
Yes, because the shift of Indian retail, which was, particularly it was a bank-related kind of savings. The first fall point was the banking or maybe to some extent insurance. But now, thanks to COVID, digital onboarding and digital infrastructure and, this option trading being popular, you see what kind of a participation you're getting. We are getting about 3 million customers per month, 100,000 customers per day. I mean, we are talking about 100. I think I just saw November data. It is 133 million as of last month. So we are headed to become 250, 275 million. So my sense is that demand for equities will continue for next 4-5 years without any problem.
All right.
Without any problem. So in fact, particularly if the continuity of the government is there, then it gets strengthened even more so. So I would think that in that backdrop, you have to see which are the companies who are able to scale up, and maybe at index level it is expensive, but at individual company level, the new stories, the turnarounds, the companies which are
digital focused
digital
companies,
focus, new companies which is getting listed. In fact, this is a amazing time, once in a lifetime kind of opportunity for unlisted companies to come in the market. The large unlisted companies must come, create wealth for themselves and create wealth for the nation. I mean, let the people per se participate. And I'm sure the guys who get listed, they will have, because I'm listed, I know the benefits of listing is more than remaining unlisted.
Okay. Well, you know, one space that you've been really bullish on and one stock is Zomato. So what we've done is we've invited the management of Zomato to chat with us. Very interesting discussion lined up. So let's slip into a very short commercial break. Don't go anywhere. When we return, Akshant Goyal, who's the Chief Financial Officer of Zomato, will be with us.
CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. Well, Raamdeo Agrawal is our guest editor. But the company that we are focusing on now is Zomato. The stock has had a roller coaster ride since its listing in July of 2021, hitting highs of 169 rupees post-listing, but also seeing lows of about 40 rupees in a year. But since then, a lot of water under the bridge. Markets are excited about prospects for Zomato. Stock is reflecting that. Mangalam is standing by to talk to us about that journey of what we've seen so far. Mangalam, over to you.
Well, you know, as far as the new age companies are concerned, in that Zomato has actually scripted a compelling saga from a blockbuster listing highs to weathering storms of new age challenges and ultimately emerging fundamentally stronger than ever before. So let's delve into the riveting journey of Zomato itself, the rise, the fall and the resurgence as it were. First was the blockbuster listing that happened in 2021, offered at 76 rupees, the stock listed at 120 and soon after hit an all-time high of 169, captivating the market with its promise and potential. Then came 2022 and along with it, the challenges of all these new age companies. I mean, starting with the US interest rate hikes, the post-COVID lull in demand, there was low visibility of profits, senior level management exits, institutional investors and PE supply, as well as high valuation. So we saw a big decline in all new age companies' share prices, and Zomato wasn't any different. The stock hit a low of 40.5 in July 2022. But this was just the beginning of an incredible turnaround, which we now call the resurgence. Zomato's Phoenix-like rise was fueled by strategic moves. One was improvement in their operational metrics, focus on core growth engines of food delivery, and paring all non-core businesses out. Their enhanced market share further aided improvement in their overall business. And that's not all. Robust growth and unit economics of their Blinkit business, which is Zomato's strategic venture, added further fuel to the growth engine as well. So here's the journey of the business in numbers. First up, we have the food delivery revenue that was absolutely consistent. And in that consistency, we had a strong turnaround in their food delivery EBITDA as well. From a loss of 113 crores, it gone all the way up to 204 crores. Secondly, from a solid growth standpoint, the average order value of Blinkit, which is now a value driver for the company, has crossed that 600 rupee mark. And in the previous quarter itself, it's turned contribution positive, contribution margin positive. And as a result of it, it's just a matter of time before this turns operationally positive as well. So let's talk about the key triggers that they have: increasing transactions and transacting customers, them also increasing their order frequency, higher loyalty and stickiness coming in from Zomato Gold members. They have, more share than Swiggy now. Swiggy's peak has been 52%. Now the market share is around 46%. They've been improving their operating metrics of the Blinkit business as well. And at the same time, they have a huge cash balance of close to 11,761 crore rupees on their books as well. Is the street excited by it? Are the brokerages giving a vote of confidence to Zomato? Yes, we have, nearly 86% of the brokers on the street have a buy or a positive rating on Zomato, with the target prices ranging anywhere between 130 to 170. So that's the story so far of Zomato: the rise, the fall, and then the resurgence.
All right, thank you. That's very well put there, Mangalam. So the rise, fall and the resurgence of Zomato. In fact, now we have the management of Zomato joining us, and of course Raamdeo Agrawal of Motilal Oswal Financial Services is sitting by with us. Akshant Goyal, who's the Chief Financial Officer of Zomato, is with us right now. And Raamdeoji, you want to take it forward with Akshant?
One of the things about Zomato is that not only in food delivery, you guys are duopoly kind of situation, but you have Blinkit also, which is on top of it growing very rapidly. So, but then still combined as a company, you are not made profit. So, is it a story of, it is a story full of hope that someday you will make money, because ultimately the stock market is about a next discounted value of future cash flows. So, what is your view on, for how long one has to wait to see, within your own disclosed kind of numbers, can you guide us in terms of saying how exactly profit and profitability and profit numbers will start flowing in next 5-10 years also?
Yeah, so last, I think June quarter this year was the first quarter when at a company level we were profitable. We reported a small 2 crore profit after tax. And then September quarter that increased to about 40 odd crores, right? So company, I think as a group combined business is already profitable, and I think it's only going to increase from here as the businesses mature. And you're right, I think Blinkit is a relatively still nascent business. We need investment in that business for it to continue to grow. The top line of that business is doubling year on year, right? So I think it will be in that phase where it will take a while for that business to generate meaningful profits. But I think food delivery is shaping up well, and as a result, the sum of those two should remain profitable, and therefore the company at a overall level should continue to remain profitable and grow from here.
But do you think Blinkit itself can be a lakh crore or 2 lakh crore kind of turnover company in next, in midterm kind of thing? The pace at which you are going?
Yes, it's already north of 10,000 crores in terms of GOV, top line annually.
Yeah.
And
yeah.
really speaking, it is a 1.5-year-old business right now, right? So, and still growing at 80 to 100% year on year. Right? So, I think, and it's a long runway, of course, from 10,000 to what you're saying, 1 lakh crore, but it's, I think, fairly probable that the business will continue to scale. And at some point, we think it's likely to become larger than food delivery. Right? Food delivery today, if you look at the top line, from a GOV standpoint, it's about 30,000 crores. And if Blinkit business continues to double year on year, and food delivery is also growing 25-30% year on year, but at some point, the trajectory of the two businesses in terms of size will cross, I think, in the next 3, 4, 5 years. And from there on, I think both businesses have a long runway to go.
One of the comment against your food delivery business is that it's a fundamentally very low margin business, 4-5%. Food business can have 20-30% take rate and things like that. But in grocery, it's highly competitive, and the likes of Avenue and all, they make just about 4-5% net margin. Now you deliver at home free of cost or maybe some charges. So how do you think of making money out of them?
So our ambition also in this business, our stated objective goal has been that this business should get to 4-5% margin, and that's the goal. Right now we are not there yet, but as the business scales, the gross margins will increase. We're also charging consumers here delivery fee, so that's a big driver of profit as well. And there is then this ad sales, the advertisement spends that brands do on the platform, which also adds to the bottom line. So I think there's some differences in the business models of a modern retail business versus a quick commerce business. But our view is that the margin profile should be very similar in the steady state.
Yeah, Sonia?
I just had one follow-up on Blinkit actually, since we're having this discussion, and I think everyone is really interested in the quick commerce space and the opportunity that it brings up, right? You spoke about the potential for profitability, but I think earlier you had guided for a break-even, EBITDA break-even on Blinkit by Q1 of FY25. Are we on track to meet that timeline?
Yeah, so far we're on track, Sonia, on that. So that should happen if everything is predictable and remains, the market doesn't change.
So the reason I ask is because, you are a market leader in this space by a large amount. I think you're 1.2 times bigger than Instamart at the moment. But I just want to understand in terms of market leadership in the quick commerce space, what are we looking at? What is the kind of opportunity that you see for Blinkit over the next couple of years?
Yeah, so I think it's a fairly large market. I think we're not competing with any one player or a particular format. For consumers, they have multiple choices on how they transact or do commerce in the country. There are the local kiranas, there are modern retail, big box retail format stores. There are large e-commerce platforms, and then you also have quick commerce platforms, right? So from a consumer standpoint, I think all of this are in a way ways to transact and buy stuff in India, and that overall market is so large. I think that all of these individual formats can survive and become fairly large and profitable, right? So I think the focus right now, therefore, is more on like how can we solve problems or create more use cases for consumers to transact on our platform. And if you're able to do that well, I think the market is large enough for everyone to grow, right? So, and that's the opportunity which Mr. Raamdeo spoke about. I think it's the offline retail market is in a $1 trillion or more in size, right? And even if we get like 1% share of that, we'll build a $10 billion business. And today we are 1/10 of that. So I think that's how we look at it.
Yeah, Akshat, one other thing was that I think you guys started delivering gold coins also. So what are the things which are still not delivered? I mean, you're delivering food, you're delivering grocery. What are the other things Amazon is delivering which you guys are yet not delivering? Because you can deliver everything in less than an hour. They are delivering after a day or two.
Yeah, I think so. The idea is, I mean, for us, the fact that inventory should move fast is important because the deliveries are all happening from a small store, which is located in a fairly expensive real estate in the middle of the demand pockets in the country. So I think we are in that phase where we are experimenting with multiple categories and figuring out, what is it that consumers want and whether it makes sense from an economic standpoint to deliver those things or not. So in that exploratory journey, we've tried many things, as you mentioned. So today, electronics is a large portion of what we sell, beauty, personal care, children's toys, stationery. I think these are all emerging categories where we are seeing a lot of demand from customers, and we are seeing economics are also good. So I think we'll continue on that journey, and whatever makes sense from both demand and economic standpoint, I think we'll keep adding that to the store. And eventually, idea is that we should be able to utilize the real estate behind the business, which is the dark store, as much as we can, and increase the throughput, and that's when the business becomes most valuable for all stakeholders.
All right, we'll leave it there.
I just want to mention that I, for one, am addicted to quick commerce, but I'm brand agnostic. Okay, so not a day goes by that I don't order on either Instamart or Zepto or Blinkit. So I must say you're in the right space at the right time. But you want to end the discussion with him?
No, it's wonderful. I think we have a company which is likely to rival the unlisted ones like Amazon, Flipkart. They are the big daddies of e-commerce earlier. Now these are the ones who are. They have done the difficult part, delivering in 10 minutes and half an hour. So delivering in 1 day, 2 days, 5 days. I think it is going to be a huge customer experience, the way we live. I mean, other day, somebody came for breakfast. We changed the way it looks. My table looks very different in half an hour.
Because everything comes so quickly now, right?
Yeah.
Okay, well, Akshat, congratulations once again. And thanks a lot for joining in
much.
and speaking to CNBC-TV18.
Thank you, everyone.
Okay,
Thank you.
well, Raamdeo, thank you very much for being with us here on
Thanks.
CNBC-TV18.
Thanks.
Once again, a pleasure to have you with us here, sir. Thank you. Well, it's a wrap on this special show. Thank you very much for staying with us. More coming up in just a bit.
CNBC-TV18, embarking on a quarter century of excellence.